Hi there, Serial Trader here. I'm just going to do a quick follow-up update from yesterday's video on the S&P 500, Dow 30, and the NASDAQ composite. So today there was a significant bearish follow-through, and that was certainly expected upon yesterday's analysis. Although with the caution that a near-term bounce could take place at any point, and that's certainly still the case. So no labels today. Just keep it real simple and quick. Well, we're getting quite oversold here, and that's on the daily, but we're oversold on multiple time frames, and not just on this oscillator. If you just use regular, 14 period RSI, just look at any time frame, daily, 4 hour, 30 minute, etc., and you're quite oversold on RSI there. So not exactly a good point for a bearish entry, even if it does have some more legs down. It's a little late, at least for this move, in my opinion. If you're not already in this trade, you should probably just be sitting out, maybe even thinking about trying to play a bounce here pretty soon. Anyway, so still have this 78.6% retracement on the chart from last time, and that is just the retracement of this initial move down, okay? Now, what's this other 78.6% retracement I have? Well, what that is, so say you want to call this the entire correction. That was the pullback, that was the bottom, and you're working off of that premise. Now, I'm not necessarily saying you should be. I'm certainly not saying that, but it's possible. It's possible until that low actually gets taken out, and that'll actually clear some things up if and when we take that low out. But until then, there's a bullish possibility. Maybe that was the entire correction. Okay, although it looks like a very impulsive 5-wave structure. You could try and force it to be a 3. I just don't see it, but we'll see. But let's say you have, hard bottom, working off that interpretation. So you have a wave 1 up, and if you go on a little closer on this, on these candles on the daily, you can't really get the subdivisions, but there is a case for a 1, 2, 3, 4, 5 up, for 1, say. Now you have a expanded flat, B, C down, okay? So in an expanded flat, wave 2 overall. An expanded flat, you go down in A, you go up in B and make a new extreme in price, and then you go down in C and make a new extreme past A, okay? So in a regular flat, it would just be A, B to near, kind of a double top, and then C, kind of a double bottom, and then you'd be going up. But an expanded flat, which is more common, by the way, you go A, B up, C down. And then importantly, you don't make a new price low. Obviously, you can't more than fully retrace wave 1. And we didn't. So we so far came into a 78.6% retracement of that wave 1 potential. I'm certainly not calling it that myself, but it's possible. It's good to have multiple wave counts in your back pocket just in case. Well, let's say it really reacts strongly here on Monday, shoots way up like this. You have to start kind of doubting that that more bearish scenario is in play, and maybe start considering, oh, maybe we really do have a 1 up, expand flat, wave 2 down, and we're coming up in 3 and going to make new highs soon. So just be ready for that if it happens. One more thing to remark on this S&P 500 chart. So I got the black moving average here. That's the 8-period EMA, the T line. Normally provides good resistance or support during a trending move. In this case, we'd be looking at it as resistance going down. Now, when things really start accelerating, as they have been for at least the last couple days here, this teal colored line I have, the 3-period EMA, that is called the 3T line by some. That actually starts becoming kind of a natural resistance zone, and you can see we kind of resisted off of that, and fell down. So just so you're aware, another little visual tool, when things really start moving quickly, the T line loses its relevance, but then the 3T line kind of takes over the role. Alright, let's move on to the Dow. Okay, so the Dow, now the Dow actually hasn't come down as far as the S&P in relationship to its 200-day moving average there, and it actually didn't touch it on the first leg down either, whereas the S&P did. But overall, pretty similar implications here. If you take out the February low, expect a pretty reasonable follow through. And if we do take out the low, I can put some targets up, but until then, I'm not going to worry about it. Other than that, not a whole lot to say about the Dow. It's oversold, same as the S&P is on multiple time frames. Could bounce here anytime. Let's see, NASDAQ composite. Okay. Different wave count, as I mentioned last time, and there's a few possibilities. Not overly confident, so I'm not going to label it just yet. But definitely that iron reversal still has my attention. That nice gap there between those two bars. And NASDAQ never actually touched the 200-day simple moving average like the S&P did on that first move down. And we're even farther away from it this time for now. But the NASDAQ has a way of moving faster once it gets moving, and not just to the upside, in this case, possibly the downside. So keep an eye on that. If the NASDAQ broke the February lows and broke them decisively, and obviously broke below this 200-day simple moving average, you can rest assured the other two indices are going to be looking just as bad or worse. Again, though, this is oversold on multiple time frames as well, so it could bounce anytime here. Should be really interesting to see what happens Monday and for the rest of next week. And what else? One more quick finishing touch. So the VIX. Now the VIX obviously went up as the indices declined, but so far it actually failed to make a new high from that last high, which was a 26.22 on the VIX. That was the last high, and today we peaked as high as 26.01. So a lower high so far on the VIX, which would almost argue, especially if things bounce quickly and this starts rolling back over, that the more bearish scenario that was brought to your attention may not actually be the case, and maybe the bulls can still rescue this thing, but should have some clarity soon. Anyways, enjoy the rest of your weekend. Serial Trader signing off.